What's up guys, it's your boy Balo Trader here, and in this new video we will talk with you about why is risk management is your savior. But before that, as always, let's open and analyze our first deal. Our first pair for today is British pound to Canadian dollar. In here we are going to invest in the price drop after the rollback from the resistance level. So let's switch to broker and open a deal for $100 with 4-minute expiration for the price growth. And we will get back to the trading view for more detailed analysis. Let's start the analysis by identifying the main levels and channels of price movement. To begin with, we can see how at lower volumes the price developed in a sideways movement, when there was no volume domination by any of the market participants. But on the eve of the opening of the London session, the volume started to shift towards the sellers. They also formed the price movement a downtrend on an even greater increase in activity. But with such situation in connection with the London session, it came to exhaustion of sellers' orders and the chart at the historical minimum turned to the workout of the upward movement. Now we buyers are saturating the market in terms of volumes and we already see an increase to the previous levels. So working in this very uptrend, I expect further growth to the resistance zone. And now let's get back to broker. And before we start with our main topic, do not forget to leave a like to this video and of course to subscribe to my YouTube channel. We are all familiar with the revading heights and gut-wrenching lows that this dynamic environment presents. And our journey in this realm has taught us invaluable lessons, none more crucial than the significance of risk management. It's not just a tool, it's your savior, our guiding light in the tempestuous sea of trading. Let's start by debunking a common misconception. Risk isn't something to be feared, it's to be managed. In trading, risk isn't just an inherent part of the process, it's the very fabric that the market is woven from. The pivotal distinction lies in how we approach and handle it. Effective risk management isn't about avoiding risk altogether, that's an impossibility in trading. Instead, it's about understanding, assessing, and mitigating risk to safeguard our capital. It's the shield that protects us when markets turn volatile, unforeseen events strike, or when emotions threaten to cloud our judgment. And by the way, in addition to educational trading videos on YouTube, I also write educational articles in my open Telegram channel. In this channel you can find not only articles but also useful literature, educational posts and of course videos. In addition to all of this, I also run trading sessions with participants of this open Telegram channel. And those sessions are completely free, so you can have some extra money in your pocket. You can find the link to join it in the description under the video or in a pinned comment. Moreover, not a while ago I have created my own trading bot, and I am personally using it almost every day in my day-by-day activities. You could check how I am using it and how basically this bot is performing in one of my previous videos. I will leave a link to this bot also in the description of the video, the same as a link to open Telegram channel. And now let's get back to our main topic. To navigate the trading landscape successfully, we must adopt the mindset of a risk manager. This mindset emphasizes a disciplined approach, rational decision making, and a clear understanding that losses are an inevitable part of the journey. Considering risk as a guide, not an adversary, it prompts us to diversify our portfolios, avoid over-leveraging, set stop-loss orders, and employ proper position sizing and of course setting risk limits. Each trade represents an opportunity, but it's our risk management strategy that determines whether it's a calculated risk or a reckless gamble. And as you can see here, we have a really volatile movement and price change. So I will use a cover for 1 minute with $200 on board and still for the price growth. The impact of a robust risk management strategy extends beyond monetary protection. It cultivates psychological resilience, enabling us to navigate the peaks and valleys of trading with equanimity. When a trader goes awry and losses loom, a solid risk management approach helps us weather the storm. It prevents knee-jerk reactions, shields us from emotional trading, and fosters a mindset focused on a long-term success. And as I mentioned before, effective risk management isn't about avoiding risk altogether, that's an impossibility in trading. Instead, it's about understanding, assessing and mitigating risk to safeguard our capital. And later in this video we will discuss other pros and cons of risk management strategy, and basically I will give you some tips to how to build a proper risk management inside your trading strategy. And now let's make a small stop to pick up our first win of the day and move to our next pair. And our next pair is Canadian dollar to Swiss franc. And here we're going to invest in the reversal from the resistance level and of course for the price drop. So let's switch to broker and open a deal for $100 and 4 minutes expiration time for the price drop. And of course, switching back to TradingView for more detailed analysis. Let's look at the prior movement to assess the strength of the trend. Overall, the picture now looks like the prior downtrend has been restored, but let's still look at how it was before. The bearish movement was replaced by the upward movement on the decrease in volumes after the closing of the Asian session, when the market approached the opening of the London session. Before the opening, the volume started to increase and the buyers who were accumulating strength brought the price in the uptrend to the historical maximum. At the same time, the activity of sellers began to increase on the market and therefore they resisted the price growth, which led to the formation of a sideways trend. This predominance of volumes on the seller side led to the fact that the buyer's trend was exhausted and the sellers in turn restored the downtrend in which we are now working. So looking at volumes, the seller's trend is still a high level and from the resistance zone I expect a further fall to reach the local minimum. And now let's get back to broker. If you want to learn from me or to trade together, I have a private channel for my team. And as a member of my team, you get access to my mentorship, lots of trading sessions, individual feedback and more exclusive educational materials, and of course ability to copy me for social trading. So if you want to become a member of my team, then simply send me a phrase "I want some honey" in my personal Telegram to receive an invitation to the team. You can find the link to contact me in the description of the video or in the pinned comment. And now let's get back to our main topic of risk management. To craft a robust risk management strategy requires a multi-phase approach. So let's break it down. Position size. Determine the amount of capital to risk on each trade is pivotal, whether it's the fixed percentage model or the volatile-based approach. This decision protects us from large drawdowns. It involves a careful balance between risking enough to make gains for a while avoiding risking too much on a single trade. The next one is diversification. Don't put all your eggs in one basket. Spreading investment across different asset classes or industrial utilities risk exposure. This doesn't mean just investing in numerous assets, but understanding their correlation to ensure a genuine diversification that reduces overall portfolio risk. And the last but not least, risk-reward ratio. Assessing potential profits against potential losses before entering a trade is a risk management cornerstone. It ensures that the potential reward justifies the risk taken. An optimal risk-reward ratio helps maintain a positive expectancy even if all trades aren't wins. In this ever-evolving landscape, risk management isn't static, it's a dynamic process that necessitates continuous evolution. Adaptability and the learning mindset are crucial. As market conditions fluctuate, new strategies emerge, and lessons are learned from success and setbacks, our risk management techniques must evolve accordingly. In the vast expanse of the financial market, risk management stands as our unwavering protector. It's not merely a phase of trading, it's the cornerstone of sustainable success. Embrace it, refine it, and let it guide you through the ebbs and flows of the markets. Remember, trading is just about the gains. It's about safeguarding what you have to seize the opportunities that lie ahead. A solid risk management strategy isn't just a shield. It's the pathway to longevity and prosperity in this execution journey. Let's trade wisely, trade confidently, and above all, let's trade safely. Cheers to the guardianship of the risk management, our compass to success in the trading world. And now it is a perfect time to pick up our second win of the day. So, thank you everyone for watching this video till the end. Do not forget to leave a like to this video, subscribe to my YouTube channel, and of course to drop some comments. See you in a while, have a good one, bye.